CoreWeave is trying to become a backbone of the AI cloud, but the stock has been a roller coaster. Hey guys, this is Hamza. I've been trading for almost 2 decades. If you've not yet, please like and subscribe and click on the link below to get your free consult on how you can quadruple your money in Dubai real estate. Guys, this is a once in a lifetime opportunity. I can help you all make a lot of money. The barrier to entry is not that high. All right, guys, let's talk CoreWeave. Since its IPO earlier this year, it was in March. The IPO was at $40. CoreWeave shares, they went up a lot. They were climbing up, but right now they came all the way down. They're down around 60 to 70% from the all-time highs that they made. As you're seeing, there's a correction going on in the broader AI market. It's just a cooling down, right? The AI infrastructure play is, the big players, Nvidia, Palantir, everything is down right now. But CoreWeave, they have seen explosive revenue growth, right? In Q3, their revenue more than doubled year over year to about $1.36 billion. That's beating expectations and showing strong demand for its GPU-powered cloud services. The company is forecasting 2025 revenue of roughly around $5 billion. That's still slightly below analyst consensus. Obviously, because of the bottlenecks and supply constraints right now. But these are going to get pushed over into 2026. So these are just, they're just in the pipeline, right? So they're not going away. They're still there. They're operating large facilities. They're rapidly expanding their AI cloud footprint. 40 plus data centers and a huge revenue backlog, over $55 billion in contracted future sales with top tier enterprise and federal clients, right? You got Microsoft, you got all these federal clients. So I think it's going to keep growing. But the valuation, the PS ratio, the price to sales ratio, it's around 10 to 11x forward sales. Guys, the valuations right now, to me, they don't mean anything. It's people are investing. The investors look in the future growth. That's what they've been doing since Tesla. So for me, valuations don't mean much as long as they're not like crazy. But investors right now, they're willing to pay a premium for future growth. That's just how the market is right now. The market is not like it used to be 10 years or 15 years ago, right? It's around 40 billion market cap. They have some debt. The company is obviously not yet profitable quarter over quarter, right? They are still, they're still growing, right? So this is a play which can grow. So if you can add on dips, which I am thinking of doing, I don't have a position yet. It's one of the tickers that I've been watching closely, and I'm about to open a position soon. Especially with the price dropping, I think it's a good entry point. The risk and volatility is there, right? The high capital expenditures, their heavy debt levels, the execution pressures. So it's very sensitive to news, and so are the other growth stocks, right? Any growth stock that you guys are gonna see, they're gonna be sensitive to news, right? Any news, and it can move in either direction. That's just how it goes with all these growth stocks, because people are investing in future, and as long as something happens, the market drops. Investors want to take risk off the table, and these are the first to get hit, which is very normal. But if you can withstand the volatility, I think it's a good play. I can't predict price action. Nobody can. If somebody tells you, hey, we know it's going to 5x, 10x, 20x, it's going to drop, that's BS. Nobody knows, right? Some analysts are rating CoreWeave as a strong buy because of the future income potential. But others, they're more conservative. They're just pointing to valuation risks and execution uncertainty, given all these high expectations that are already priced into the stock. But right now, it's already down a lot, right? It's one thing if you picked it up at 150 or 160, but right now it's at around $60. So I don't know. It's better. I'm not saying it's not going to drop more, but it's still better to buy at 60 than at 150. Guys, CoreWeave is one of the most watched AI infrastructure plays, period, on the market right now. I don't think there's any other plays that are being watched like CoreWeave is. It's riding a huge revenue growth, massive demand for GPU cloud capacity, but it's premium valuation, heavy spending on growth, execution challenges. So this stock, I mean, it's only for people who understand that the prices can move up and down very fast. So, investors that are betting that CoreWeave can scale fast and turn its backlog and it just have a rapid growth into consistent profitability, it's in the next few years. It's not gonna happen instantly. It's gonna be in the next few years that it's gonna turn profitable. So if you guys think it's for you, you can jump in. I mean, it's looking very promising. Nobody can predict the price. I cannot. This is not financial advice, but I would say keep a close eye on this play, because I think it's a very good company. It's an up and coming company. They're gonna do big things, and they're gonna play a major role in this AI revolution that we're about to witness. Guys, if you watched it this far, click the thumbs up and subscribe to the channel. Get your free consult so I can tell you exactly how you can enter in the Dubai real estate market. And there is a lot of money to be made. The barrier to entry is not that high. Even if you don't have a lot of money, you can get in and you can multiply your investment. In a couple of years, you can have a really good portfolio. Guys, I appreciate you all, and I'll see you all next time.